obviously we are very interested about your journey and also the story of Frontline, of course. But before we head into shipping, can you go down the memory lane a bit? Because I guess it's fair to say that you started in finance and maybe stock picking and found that fascinating. That was maybe your start in finance at least.
Yeah, I actually have a background then from the equity markets. I graduated with a bachelor in science from a university here in Oslo, and then kind of I was more inspired by the movie Wall Street and hitting the financial markets than I wasn't really considering shipping too much. And to be fair, at that time, as many times after, shipping has kind of been doomed a bit. It's been looked at as a marginal industry that's just going to be effectivized and kind of commoditized and kind of be like boring. But so I started off in the equity markets first as an analyst and then managing a small fund here in Oslo. So that was basically kind of where it started. I had a few friends that were working in the shipping industry, and I remember it was quite funny because during those years, I believe it was Reuters were trying to set up a screen for ship fixing. So basically, where to try and avoid the physical broker in between the cargo owner and the ship owner. So actually, as early as that, so early 90s, somebody tried to structure this business.
Can you just describe the equity markets today versus the time you started? Because I don't want to bring up your age, right? But there's a gap between 90s and today, right? So what has changed? Is it much more information? Is it the standard things, or are there something that is really different that you had to be there to understand the difference in the equity markets today compared to your time?
Well, I believe kind of, and I'm not that old, so I don't know how the 80s were, or at least I wasn't in the equity markets at that time. But I believe kind of every big cycle in the stock markets has its kind of theme, and so the 80s was kind of roaring, with the leverage and M&A, and it was also where kind of high yield bonds kind of came up into play and all that stuff. But the 90s was more kind of dominated by the rapid change in technology. So this was kind of the where Cisco and Microsoft and all these companies started to evolve. So that was a really interesting kind of time. I think here in Norway, it was typically where you started to see funds invest more and more abroad. So, after being constricted to the Oslo Stock Exchange, they started to look across the borders and particularly towards the US. So it changed kind of the dynamics in the investment kind of environment for Norwegians as well. But I think one of the things, and this was an important kind of thing for me, is that whilst the 80s were dominated by fundamental bottom-up analysis, and as I mentioned, you had a lot of M&A activity, and during kind of those years, and a lot of leveraged debt and so forth. In the 90s, and this was what caught my attention a lot. You suddenly started to see kind of other ways of investing. One of them being kind of the usage of technical analysis, which was what caught my eye, and also the fund I was working for and the investment bank I was working for at the time had a high focus on technical analysis, using it basically to try and it's a very efficient way of analyzing a broad area of equities, sectors, markets, and this was I found really, really interesting.
How do we separate fundamental research from technical research? Because if you go deep enough or broad enough, maybe it's just the same, right? So how do you separate those two concepts?
Well, if you are a chartist, to use a fancy word, you accept or you acknowledge the fact that if you look at price action and volume, you actually see the sum of what all the fundamental investors are doing. All the bottom-up analysts are kind of where they're putting their money. And if you say you put your money where your mouth is, you're actually seeing the sum of a lot of people's opinion about that stock or that market or that sector. So it's kind of cheating, you could say. You basically try to quickly get a grip on what a lot of people are thinking about a certain equity. But in order for it to work, it has to be a very liquid stock. It has to be a lot of investors. And the kind of the fundamental thing about technical analysis is that you also assume the market is efficient, that information is evenly spread. So, if it's a marginal stock on an, OTC list in a weird exchange where there are, 500 shareholders, there is no way you can apply technical analysis. But for the broader markets, for the big, large cap companies and so forth, I'd like to argue that the price action you see on your screen is the sum of people's kind of actions and the sum of a lot of people's analysis of that company or that sector.
Is it fair to say that the downside or maybe a weak point in going about that way when investing is that if you take, it's so much psychology in the market, right? So maybe if you find the right strategy on technical chart, maybe the psychology or the management, maybe you're missing some pieces that can either ruin your conviction or ruin the picture you have made in your Excel sheets. Or is that a bad assumption to say?
No, it is. And I think people listening in has to understand that, where this kind of movement erupted in analyzing the equity markets and commodity markets too. This was during the 90s. And during the 90s, one thing it really didn't have was these massive long short hedge funds. You didn't have quantitative models. You didn't have kind of black box trading. You didn't have high frequency trading. And so there was far less noise in the market. And this is why kind of your point is spot on. There can be so many false kind of signals coming into the chartists' world, basically due to all these machines and also a much larger community of looking at the same patterns. So, we kind of, if you're an old school chartist, you're looking for head and shoulders and cup and handle and all this kind of formations. The thing is, right now you have massive computers looking for the same, and that will trigger kind of action in the market. So yes, it's a very noisy picture. But if you look kind of from if you put the big goggles on and you're drilling kind of top down, I think it's still very useful.